Okay. Thank you so much. I am Marcia Herring with the Nebraska Association of School Boards, Director of Board Development, and I first would like to open the evening with a very, very warm welcome and thank you for taking the time out of your busy schedules to be with us this evening for our finance workshop. Before we get started and turn the program over to our first speaker, I'd like to introduce our sponsors. We do have two very gracious sponsors of our program this evening, starting with Eagle Print, Matt and David in the back. And we'll be taking a break after our first speaker if you want to pop out and visit with our sponsors. Second is Craig Caples. Many of you know Craig as our IT director and also director of our new subsidiary company, Nets, which provides software savings programs to our school districts. And with that, we're going to move into our workshop and just a little bit of an intro as to how we got where we're at. As we embarked on the design of the finance workshop this year, Sharon and I did a little bit of research, if you will, as to trying to identify truly what the needs of our members, specifically what you were looking for when you came to a finance workshop. And so she embarked on researching, contacting superintendents, business managers, and I spoke with board members. I think there are even a few here in the room that I actually did have the opportunity to visit with, simply asking the question, what are you looking for when you attend a workshop put on by the School Boards Association? And the theory behind that is that I would like to do a better job in our learning opportunities of hitting a mark as opposed to hoping that we throw something up and it catches. And the result of that, I am very excited about. We invited in the experts. We are not experts at the association when it comes to finance. And we need the individuals that are working in that particular arena on a daily basis. And I'm bringing to you the information you need to be a better informed board member and or new superintendent, because we have a few of those sitting in the room. And so with that, we're going to start the evening with Doug Lewis from Papillion La Vista. He was gracious enough to give us the 101 on school finance. And if you would please welcome him.
Thank you. Can everybody hear me? I have the dubious honor of presenting Finance 101 after a meal, which is always a difficult thing. So, they also have me caged in because they're filming today, so I can only wander from here to here. So we'll see what we can do today. School finance topics, again, Marcia mentioned that they went through, spoke to a lot of board members, school administrators, trying to come up with the topics that were pertinent and that board members wanted in a school finance presentation. So we have those listed for you here. I'm not going to read through them, but those are the topics that we're going to cover tonight. The first topic we're going to talk a little bit about is that the difference between the accounting world in schools and the accounting world in the business world. There are some differences, and they're very evident as you get into it and start to look at what happens in the schools and your auditors come in. It's a little bit different world. In the school arena, all your expenses and income are recorded in full, and there's no netting of expenses. In the business world, those refunds are subtracted from the expenses, so you net those amounts. An example of that would be if, say, a driver had an accident, and the vehicle then goes in and gets repaired, you have an expense. The insurance company sends you a check to cover that expense. That would be netted in the business world. In our world, we have to record the expense, and we have to record the money from the insurance company as a revenue. So a little bit different world in terms of the school accounting system. Schools use various funds, and each of those funds have their own specific rules. You have your general fund, you have a building fund, a bond fund, a QC puff, et cetera, et cetera. And each one of those funds you can do certain things with, but you can't do everything with, except the general fund. In the business world, really limited use of different funds. Usually there's just one fund, and everything is done out of that one fund. Coding to accounts is very important in the school world. You have, within each one of those funds, you have certain accounts, and those accounts then are accounted for at the state level for state aid purposes, at the federal level, etc. So it's very important how you code those. And it can mean the difference between increases in state aid or not. Special education funding, whether you receive the full funding or whether you receive a smaller amount. In the business world, you're really looking at the bottom line. Where they're coded isn't as important as that bottom line. School, you can't spend over what you have budgeted. Whatever you budget, that's the amount you have to spend. You can go back and amend the budget, but then you probably don't have the funds to cover that. In the business world, you can get a loan, you can spend reserves, you can go over the budget. You don't have to go and redo your budget every time you need to spend more than what you had budgeted the first time. So those are some differences between that school and that business accounting practice. All right. School finance to taxing funds. These are the funds that you hear from your community members quite often about because they are impacting directly those property taxes. General fund, everybody knows the general fund. That's the $5 levy limit. Special building fund can be used for capital construction projects and only capital construction projects. Bond fund is used for the repayment of bonds. And there is always some confusion between that bond fund and that building fund. Many times people think that when you pass a bond and you receive the money from the bond, that that's where you're spending the money to build those projects. In actuality, that money goes into the special building fund, and your expenditures are coming out of your special building fund, and your bond fund is only used to pay the principal and interest on the bonds that you borrow. The Qualified Capital Purpose Undertaking Fund, or as we call it, the QCPUF. The QCPUF has undergone some changes through the years. It's been one of those funds that we have sometimes asked the legislature to make some changes in to provide us a little bit of latitude in terms of some of those capital construction projects and being able to work a little bit outside of that $5 levy lid, where both the general fund and the special building fund are under. We can use the capital purpose undertaking fund for a variety of things. Hazardous materials abatement, which was what it was designed for originally. Handicap accessibility with the ADA laws that came into play. Schools had to make changes within their buildings, and this was one mechanism that you can use to do that. Qualified Zone Academy bonds that came with the ARRA funding. The air quality and mold abatement, and then upgrades ordered by the fire marshal, which is the most recent addition to the QCPUF. There are other funds that school districts can utilize. It doesn't mean that all school districts are going to utilize these. They may not have a QCPUF fund. They may not have an employee benefits fund, a depreciation fund, but they do have the ability to create these if they need them. Employee benefits fund and depreciation funds are just what they say. They're used for employee benefits, and they're used for depreciating items like buses, computers, etc. Those are funded by using your reserve and moving it into those funds. They are not taxing funds. So you're taking money from the general fund. If you have excess money at the end of the year, you can move that into an employee benefit fund. You can move that into a depreciation fund, and it's actually budgeted within your general fund budget. Lunch fund. Everybody knows the lunch fund. Activity fund, student fee fund. Those are fiduciary funds, which means that when you bring the money into those funds, it has to go out to the same activities that brought it in. So if you have activity funds and student fee funds that are divided up into very small categories, as they bring that money in, it has to go out in those small categories to those individuals. You can broaden those categories and have a little more flexibility. It just depends on how you want to account for those. Then the contingency fund is a very strict usage fund. It can only be used for legal judgments and insurance liabilities for the district, so very limited use in terms of that fund. And then a cooperative fund is where several school districts may be providing a single program, and they are cooperating in that program. Therefore, each district from their general fund provides a payment into the cooperative fund to run that program.
Doug,
Yes?
do each of those funds have to have their separate checking accounts?
Do each of those funds have to have their separate checking accounts? No. They do have to be, well, they can all be in the same bank, not necessarily the same accounts, but you can do some pooling of your resources. So there are a variety of ways that you can do that. But my answer to you would be no, kind of. See me later? It depends. Are you asking specifically?
Well,
I can tell you what we do. I have a general fund, lunch fund, are pooled together. Then we have a separate building fund, separate bond fund, and activity funds are separate. Activity and student fees are together, but they're in a separate bank. So we have some division, but we have some pooling going on also. Does that help?
yeah. When school districts have 10 different checking accounts, and you're transferring money, if you're writing a check from the general account or to the account, creates a nightmare. And our auditor said you can have one checking account and just keep track of your funds. And so you're never writing a check from one to the other because it's all in one check.
You can. You can have one account divided up into your separate funds. You can do that.
The funds in your accounting
Right.
package.
You have to keep them separate by fund. And so your revenues have to be kept separate, your expenses have to be kept separate for each fund, but you could have one large account. Yes?
Just to clarify, when you said what goes in must come out, do you need to separate your football, your baseball, your basketball?
I said, if you do that, then yes, you do. But you don't have, you could say activities,
Okay.
clubs, so you could make broader categories in which you bring money in and out. And I did mean to say, if you have questions, raise your hand, we'll answer them as we go. How are Nebraska schools funded? This is statewide, or as some people would say, not fully. The other side of that coin is that most of the legislature will say, you are fully funded every year. We always respond, but you change the funding every year to make that match. So, however, 55% local revenues or property taxes, 36% state revenues, 8% federal, less than 1% county, and same for other. What's that tell you? That most of your funding comes from property taxes and the state. Those are the two big players in terms of funding for Nebraska schools. Now, your school may not look like those percentages. but that's the state average. Here are some examples. Again, all districts revenue, 55%, 36%. This is Crete's. Sandy Rosenboom did 2 of the presentations. I'm doing 2 of them. So we're using Crete here. Crete has 41% in local revenues, 48% in state revenues. If you looked at Papillion La Vista, we would be 50% in local revenues and about 41% in state revenues. So between the 2 schools, you see a difference. If you compared yours, you would see differences. It just depends on what type of local property tax you have. It depends on other factors within your districts. And for us, it depends on if you're in the learning community or not. Whichever side you're on in this particular picture, in other words, if you're more property tax, less state aid, or you're more state aid, less property tax, they each bring their own challenges. If you have a large amount of property tax that you're using, you're probably running into some difficulties as you go through the year because of the timing of those property taxes as they come in. And that's one of the reasons that you carry that reserve within your budget to help you through those times when you don't have revenues coming into your district. And the thing about property taxes, as we all know, is they don't come in until May and August. So you're going through almost an entire school year of expenditures before you actually get your major revenues coming in. So that reserve helps you through those times when you don't have the revenues coming in. On the other side, if you're very heavily dependent on that state aid side, then you're kind of at the will and whim of the legislature and what they decide to do on a yearly basis. Nebraska state aid formula. There's a real discussion right now about a simple formula. And the argument really is, it is a simple formula on one side, and on the other side is it's way too complicated. So what we're going to try to tell you is the simple side and the complicated side. The simple side is right here. You take the needs of your district. What does it take to educate a student in the state of Nebraska? Tough question. But the formula is meant to do that. Needs of the district minus the resources. What do the resources come down to? Well, the previous slide said 2 things. State aid, property tax. So where are those needs or those resources coming from? That's the property tax of your district. If you have high property tax per student, then you're going to have high resources. If you have low property tax per student, then you have low resources. So you take your needs, you subtract your resources, and you get equalization aid, not state aid. You get equalization aid. This is the equalization part of the formula. There are other pieces within this formula that everybody gets. And it's still state aid. It's just not equalization aid. So this is the part of the formula, pretty simple. Take your needs, take your resources, you subtract the 2. If you're on the negative end, then you should get equalization aid. If you're on the positive end, then you have enough resources to meet your needs. That's the basis. That's the simple part. Here's the complicated part. How you get there? How do you figure out what those needs are? Well, here's their list. Poverty, limited English, instructional days, focus schools, summer school transportation, special receipts, elementary, teacher education, distance ed, averaging adjustments, student new growth, etc., etc. That's the complicated part. All these little pieces that go into it. Limited English proficiency allowance correction. So there's a respin of the whole formula and they take money back if they gave you too much the first time around, or you didn't spend it. Resources, again, property taxes, that major piece. Gives you that state aid. We're going to try to break it down a little bit. Calculating that pre-K-12 state aid in your district. It really comes down to, these four pieces. First piece, students. In state aid, you get a basic funding per student. So the number of students you have impacts your needs. More students you have, more needs. That makes sense. We also throw in certain demographics. Are they poverty? LAP students. Those are going to require more resources. So we're going to add some additional needs for those types of students. So your students, the numbers of students, and their demographics impact that basic funding part of this formula. Property values. That's second piece. That's the revenue side of things. Increases or decreases in valuation have a huge impact on what that state aid or equalization aid number is going to be. Because by taking your property value, they multiply that by what they call the local effort rate. And that determines a large portion of those resources for your district. So again, if you have lots of property value and you're multiplying it by that local effort rate, you're going to have a large amount of resources. If you have low property value, you're going to have less resources. That's the piece that the legislature has been using to adjust the dollars that flow out of this formula. Because if I raise that local effort rate, used to be at $1, it's been as high as $1.365. Now it's back down to $1.03. But if I go from $1 to $1.03, and I multiply that by the same amount of property, I just increase my resources. So if I have the same amount of needs, and I've increased my resources, that's less state aid that goes out. And for some of the rural districts that are very high in property, that drops them completely out of that equalization part. Because if they were receiving it, by raising that up from $1 to $1.03, I've now said you have enough resources to educate those kids. So they drop out. And that's one of the concerns of the smaller rural schools. They're dropping out with some of this because of their property that they have within the district. School districts, so student growth is a factor. If you're a growing district, because of the way that the formula works, you may need some additional help to deal with those students on each year. So they've added some pieces in there where you can predict what your student growth is going to be and receive some state aid on that. New school construction, whenever you open up a new building, that's a cost to a district, and it's very difficult within the formula, especially when you're dealing with 2-year-old data, to catch that up. So they've given some ability to use for state aid in terms of new school construction. And then the last two are the new pieces in 407 this year for state aid, and that's the teacher degree level and the instructional time. And these two pieces, what they did with them is they said, okay, anybody's going to be able to access these, whether you're an equalized district or not. You can get these two pieces. Instructional time, if your students, on average, attend 175 days, then you are going to receive some instructional time allowance. You're going to receive some dollars. Now that dollar amount is capped at $20 million. So as more districts access that, the amount that each student is going to get decreases. So as more access it, people are going to see that number decrease for their districts. because other people are coming on and the number is capped. Same with teacher degree level. If you have master's degree teachers within your districts, you get some of this dollar amount. Again, that's capped at 35. But it doesn't matter whether you're an equalized district or a non-equalized district, those two categories are dollars that you would receive. The last one, annual financial reports. In this formula, they're using 2-year-old data, and then they are growing it to present day. So they have the information from your 2011-2012 expenditures off of your annual financial report. And again, that gets back to why you need to code things where they're supposed to go, because this is the data that they're using to calculate your 2013-14 state aid. And then they're growing that. And it used to be that they would grow at 2.5%, then 2.5% again, and then another 1.5%. Next year, it's at 2%, or for this year, it's at 2%. They grew 2-year-old data 2%, and the year after it's going to be 4%. So that's the other way that they've slowed the growth, is they're not growing your expenditures as much as they have in the past, and that is slowing the growth of the formula, therefore reduces the amount of state aid that's going out. So the two mechanisms that they've used really are that property tax and that local effort rate, the major areas, and this reduction in the growth of your expenditures. Yes?
As we negotiate for higher salaries on a continual basis, how does that figure into holding down our expenditures? You know, that's 85% of our budget.
It's 85% of most school districts in the state of Nebraska, yes.
So do they not recognize that?
Pretty much no. I mean, it's going to be reflected in your expenditures, and it's going to grow, but they're growing it at the rate that they've set. So you're going to have to work within the rates of growth that they've established for the districts as you work through your negotiation processes with other teachers. I don't know how else to say that. Yes?
I think the state formula uses adjusted valuation rather than actual
It
valuation.
does, yes.
Can you explain that?
Do I have to? Dennis is probably better on this explanation than I am, but basically the adjusted valuation comes from the state property tax commission. So it's not the valuation that you see from your county assessor, but it's just what it says. It's an adjusted number through the state.
That's what I was wondering. How do they come up with the formula for adjustment?
There is one, and your district should get an adjusted valuation sheet every year. That kind of goes through what they've done in order to get that adjusted number. It's rather than going into the whole process, just know that it's done at the state level to get that number, and it is accessible. You can get the information. Funding for state aid, where does it come from? Basically, your individual income tax and your sales and use tax. Those are the two largest categories for the state. Property tax is a local tax. Income tax, sales and use tax, those are state taxes. The last couple of years, we've been trying to meet on a state level to talk about state aid. We brought in groups from NERCSA and small rural schools. We brought in medium schools. We brought in large schools to sit down and really have a discussion, because we know that as a group, we're much more powerful in trying to get things changed than we are as a bunch of individuals acting with our own districts in mind. And the legislature has really told us that it's pretty easy to deal with you when you're all going in different directions. So we've tried to sit down and talk and try to get kind of a big picture and understand where all the districts are in terms of state aid, because they are in different spots. And probably the biggest discussion that we have is this issue of equalized versus non-equalized, because that's the largest portion of state aid. Everybody gets state aid. Not everybody is equalized. So not everybody gets equalization aid, but everybody gets allocated income tax. They can access things like the teacher education. They can access now the instructional time. But this non-equalized and equalized is a large proportion of what we consider state aid, and one of the areas that causes the biggest contention when we all sit down and talk. And basically, equalized is when your needs are greater than your resources. So those low property tax per student districts. Your needs are greater than your resources, then there's a gap. And that gap is filled in by state aid, and that's the equalization part. If you're out in rural Nebraska and you have a declining, and not just rural Nebraska, but even in some areas around here, you may have a decline in enrollment. And as that enrollment declines and your property value, if you have farmland, which is escalating in price, so your property value is going up and your student population is going down, your needs are decreasing, but your resources are increasing, then you have enough resources for your kids and you're non-equalized. And so state aid isn't going to provide you any additional dollars in terms of equalization aid to help you out. Non-equalized districts, again, they receive the allocated income tax, they receive retirement aid, and they receive net option funding. Again, unless you're in the learning aid. They also receive teacher education, and they also receive, or can receive, student instructional time. So one of the things that the legislature did, and something that I would guess they're going to continue to look at, is how do we provide some additional funding for those districts that are non-equalized. That's what they did with those two pieces last year. And I think that's probably a direction that they're looking at, how they can make that work within this formula. Controlling school expenditures. This is always the tough part, but there are some things. Levy limit, you have $5 for a combination of the general fund, the building fund, and your non-bonded qualified capital purpose undertaking funds. Spending limit, previous year's budget can only grow by the basic allowable growth rate, and this determines that budget authority. I always describe it as being in a box. You got a levy lid here, so if you're not bumping up against the levy lid, then they turn the box over and you're bumping up against the spending lid. So most of the time, if you're at $5 or pretty close, you have the ability to spend more, you just can't do it. On the flip side, there are districts that have very low levies, so they have lots of levy authority, but they don't have any authority to spend it. So the formula does two things. It says, you've got to stay within this levy limit, but at the same time, you can't spend above this limit, the box. And then the last one that we all know is that community limit. And it's one that I always argue is probably the most important, and the one that really should be controlling all this is whether the community feel is an appropriate level of funding for the school district. But that creates some issues also. What's under the lid? What can be outside? What can be under? Go through these really quickly here. General fund, voluntary separation judgments, retirement income, or increases, excuse me, can be outside the lid. All other general expenses are under. Special building fund, projects commenced prior to 1996. I don't know if there are any of those, except maybe in Hastings. All other renovations to facilities are under the lid of the special building fund. And again, all of these under the lid are that general fund and special building fund are within that $5. Outside of the lid, you can levy 5.2 cents outside of the lid in a qualified capital purpose undertaking fund if you bond the project. It has to be a bonded project. If you don't bond the project, then it's all under the $5 levy limit. So that's the one piece. If you bond it, and you don't have to go out to the public, but it takes a 75% vote of the board in order to move forward with that. But if you bond it, you can do that outside of the levy limit. All other projects in the capital purpose undertaking fund that you would tax for would be under the $5. And then in the bond fund, everything, the bond and interest, bond interest and principal are outside of the levy lid. And it doesn't matter what the amount is there, because you've already gone to the people and asked them, will you vote for this? They said yes, so now you can tax for them. Any other expense would be under the levy lid. And you probably would do that under a different fund anyway. So. What are your limits? Building fund, if you can get there, you've got 14 cents. But you're still under the $5, so you can do the math. Qualified capital purpose undertaking fund, 5.2 cents. Can be outside the lid if it's bonded. Bond fund as needed to pay. Voter approved bond issues. Skip over there. Questions up to this point? I've gone fairly quickly here. Yes?
Could you give me an example of some recent judgments? You had in your other slide, the next one, where it says what's under the levy lid.
Those would be legal judgments.
Could you give me an example?
I haven't had any recently, fortunately. They would be large civil cases where a school district would have to pay back, or let's say a school vehicle, you had a major accident, you had a multi-million-dollar payment that you would have to make, and the insurance company didn't cover all of it, or whatever, something like that.
Big Turk settlement.
Big Turk settlement would be another example, yeah.
Commission judgments, though, would be under Commission of Industrial Relations.
Correct.
Yes.
So, Commission of Industrial Relations, so if you went to the commission salary dispute, and they made a judgment, that's under the levy lid. You have to pay for that through the general fund, through the taxation. These would be things, special judgments outside, usually large sums of money that you're trying to, you would have to tax for possibly over several years to do. Yes?
I have a quick question on bond fund, specifically to pay principal and interest. If you refinance and you have savings and you get to the end of a bond and there's still savings that dollars that are remaining ostensibly because of that, where can those dollars be allocated?
Bond fund.
Say again?
Bond fund.
Just, you have to stay on bond, you can't move, you should at a certain level. And
pretty much. Try to, I mean, it's usually going to happen in a mature district, and you shouldn't have a lot when you finish up with them. But you could have some.
And you can use some of that to do adjustments or repair to what its original purpose was. If it's for a new building.
Out of the bond fund or out of the building? You can do it out of the building fund.
Bond.
If it was leftovers, what you're saying, like she asked.
You construct a new building and you've got to,
Not out of the bond.
not for,
Principal and interest is all you can use the bond. The money you receive from the bond, if you have residual. The question was with regards to, if you pass a bond, you're building a building, $100,000. You take a bond out, you get $100,000. You may make a little interest, so we'll say 110. You build the building, it costs you $90,000. What can you do with the additional dollars? You can spend those, depending on how you wrote that bond language to start with. You could spend those on projects or other things within your district if you gave yourself the latitude in that bond description to do that. So you want to be careful how you write those bonds, and talk to your attorneys because they do a great job of handling that for you so that you have some flexibility to do it. Yes?
Yeah. The QC funds, or the building fund, when you sell bonds for a building, it goes to the building fund, right? And then the retirement of the debt goes to the debt service fund, or the bond fund. The QC fund, if you sell bonds, does that go into the QC fund and the retirement debt come out of the QC fund?
Yeah.
So that one.
That one's different, yeah. The question was on the Qualified Capital Purpose Undertaking Fund. And as with the bond in the building, when you let the bonds out and you get that money, it goes into the building fund, that's where you do your building out of. With the Qualified Capital Purpose Undertaking Fund, when you do those bonds, you pay the principal and interest out of your Capital Purpose Undertaking Fund. So it's a little bit different mechanism than the bond and building. Maximizing your budget, we'll kind of go through these fairly quickly. Oh, good. Purchase from another fund if possible. If you're trying to maximize your general fund budget and you have the ability to do some things out of, say, a building fund or other fund, activity fund, etc., they're all legal. Those are one of the things that you can do in order to maximize that budget that you utilize. Build up the depreciation and employee benefits fund, spending appropriately from those. Now, I personally don't use those two funds. They are very good if you are in a spending authority concern and issue. You can use those to help you out. If you have a lot of budget authority or unused budget authority, then you may not necessarily need those funds as much. Code expenses properly so they don't adversely affect state aid. This is very important, and one of the things that you want to do and make sure your district is doing is take a look at those poverty funds and your LEP funds, because when you submit your budget to the state for those two funds, you are submitting for the next year, and what you're going to spend the next year. And if you haven't really audited and determined how much money you could generate, the way that the state gives it to you is they'll calculate and figure out what you could get, and they'll look at the number you sent them, and you'll get the lesser of the two. So by knowing what that number should probably be, you can budget appropriately and turn in a number that will allow you to access all of those dollars. Now, I will also tell you that in the budgeting year, you have to be very careful that you budget to that account. Because you not only have to spend the amount of money that they gave you, but you have to spend 117.65% of the amount of money that they gave you. And that's a whole nother story, so I'm not going to give why it's 117.65%. But you do. You have to spend above the amount that you get, so you have to make sure you budget for that. And then you have to make sure that everything is coded correctly so that it comes out, because guess what? If you didn't spend it, they'll take it back the next year. Spend and claim all grant, no child left behind funds, your title funds. I try to get those out in the same fiscal year. Most of those grants run over a 16-month period instead of a 12-month period, so it is possible to do carryover and some other things. But we try to expend those throughout the year. And turn in your revenues quarterly. That helps your cash flow throughout the year rather than wait until the very end, because the process has gotten very strict these days with the federal government. So they're very likely to turn it all back to you and say, you know, we're not going to accept this. So if you do it on a quarterly basis, you'll start to see what it is they're looking for, what they're not going to allow. You can make those adjustments throughout the year so that you can access and utilize all those funds. Be conservative in determining revenue and provide contingency and budget expenses. If you have the budget authority, you want a little bit of ability to take care of any emergencies or things that happen throughout the year. Because as we said, whatever you budget, that's all you can spend. So if you have something that occurs during the year and you need additional expenses, but you didn't budget for it, well, you've got to sit down and do an entirely new budget hearing, meetings, turn it into the state, and at that point in time, you probably don't have the revenues to cover it. So what I would recommend is to put a little contingency in that budgeting process. And I'll tell you right now that the way that every district is squeezed down, you're not going to get a lot. But it doesn't hurt to have a little bit. And then be a little conservative in those revenues, because your property taxes probably aren't going to come in the way you think they are. You budget for a certain dollar amount in terms of your property taxes, and they're probably coming in about 93% of that. Keep your budget authority up, even if you can't spend it all. That sets the base for future spending. You do have the ability this year in LB 407 to access an additional 2% of budget authority. People that I've talked to have recommended that you do that. If you have the especially if you're up against that budget authority lid, you want to give yourself a little bit of added room as you go through the budgeting process and create that budget. But it doesn't hurt to try to access as much of that budget authority as you possibly can for future years. We're a growing district, 200, 300, sometimes 400 students a year. If you're in that type of situation, you can't afford to be up against that expenditure budget authority lid, because you can't add on new teachers and you can't bring those employees into your district. So you want to make sure that you protect yourself as you're moving forward and think towards the future a little bit. And then be sure your lunch fund is self-supporting, although that's getting more difficult with all the 100% whole grains and all the other things that we're having to do. Budget versus actual. And I think this is one of those categories that board members kind of look at and they scratch their heads sometimes. I know we always have discussions with the legislature regarding this idea of budget versus actual expenses. most of the time when you look at a school district budget, the budget number is probably a little bit higher than the actual. And partly, it's the way that the state requires you to budget. The other piece of it is, as I mentioned, you may want to put a little bit of contingency in there. You may want to try to capture budget authority. There are lots of reasons why that budget may be higher than that actual number. But probably the primary reason is whatever you budget, that's all you can spend. So if you're trying to match that exactly, you're liable to be in trouble by the end of the year. The only time that I've ever seen that is when somebody amends their budget in August after the last payroll so that the two match perfectly. Otherwise, your budget's probably going to be higher than what your actual expenditures are. In our particular instance, we carry a line of credit. Well, the state requires you to budget the line of credit. And I've had this argument many a time with a variety of people. And what I tell them is, if I'm budgeting a line of credit, then I'm doubling the expenditures for which that line of credit is going towards. So my budget is going to be higher than my actual simply because you made me budget a line of credit. So there are lots of reasons why a budget isn't going to match your actual expenditures. And in almost no instance will it match exactly. That's the only way you can do it, as I said, was that district that at the end of the year, they amended their budget to make it match. Special education funding. It's very important with your special education funding that you be sure your programs are recording those funds and those expenditures to special education because they are reimbursed. Right now that reimbursement is under 50% through the state. They have, over the last several years, put some money into that funding. For many, many years, they capped it at $400 million, and they said we fully fund special education, and they did at $400 million for 10 years. Special education costs went up, funding stayed the same, reimbursements went down. That pulled money from the general fund in order to cover those costs. They're starting to put some money back in because that reaches everybody. But they also understand that they need to put more money into that special education funding. The problem that they run into is this idea of maintenance of effort, so they can't put a lot of money into it every year. What they're trying to do is incrementally put dollars into your special education. So over the last 2 years, $5 million and $5 million for 2 years. And I would expect to probably see that continue in the future. I think they're trying to get that level up. Preschool is accounted for separately, is reimbursed through your federal IDEA funds. Right now it's less than 40% of the costs are being reimbursed. Here's an example of the statewide expenditures versus Creeks. I think most districts are probably pretty close to between instruction and special education. You're going to be probably around that 60 to 65% number. And then, of course, pupil services, staff services. If you're not familiar with those, pupil services would be counselors, nurses, your staff services, librarians, some of those types of personnel. Then administration, general business, transportation, operations, and maintenance, and grants, and federal dollars. Questions? That's kind of the 30,000-foot overview of school finance, and I don't see anybody snoring, so I didn't.
Doug, thanks for the information and great explanation and overview. A couple things. One, it seems like we are kind of, and I'm just interested in your take on this and your comments related to these things. Seems like we're kind of moving actually away from, when you look at what happened with teacher ed allowance and instructional time, and then some of the other things, that's moved away from a pure equalization to more of a, that's really a formulaic thing, that it doesn't really relate to equalization because it's anyone can qualify based on basically an indexing factor, and that's not really equalization. So that's just one comment about that. I'm interested in your take on that. Then the second thing is a piece that I think is really important that has a big impact on the formula and where the dollars actually go. Not in it this year, but it's coming back next year, and that's the averaging adjustment. And if you could just share kind of, down and dirty synopsis of how that works and how it's designed to get resources back to schools that, arguably need it the most based on qualifying for it with where their levies at.
On the first piece with regards to non-equalizing pieces of the formula, they've always been there. I mean, that's the reality of it. We have never had a true equalization formula. We've had a formula that had equalization parts and non-equalization parts. And what you're seeing right now is a concern with rising property taxes, especially farmland, and the concern from those areas where a single taxpayer has large amounts of property at high value, as opposed to areas where you may not have as much property per student, but you have it divided up among more people. And I think that's the real discussion that is happening on the legislative floor when you talk about the formula and how you deal with providing state assistance to schools throughout the state of Nebraska. Because it is a pretty diverse state and we have a lot of different school districts. But it is a misconception, I think, when people, it's not an equalization formula. It's got some equalization parts and it's got some non-equalization parts. And that's the way it was designed originally. To address the second piece and the averaging adjustment, which is coming back, if you look at the way that funding is provided, especially that basic funding piece within the school districts, what it does is it takes a school district by the number of students, and it compares you with 10 above and 10 below on a per student cost. So you're no longer compared to the state. You're just compared to those 10 above and 10 below. Some districts don't have 10 above. And this is, I should clarify, this is only for districts that are above 900 students. 10 above, 10 below. And then they throw out the top two and the bottom two, and they average the rest, and that's your per student cost. And then they take that per student cost times the number of students that you have, and that gives you your basic funding number. Well, if I am a district where I don't have the ability, I'm capped at $1.05, I don't have any growth, there's nothing that I can do, I'm increasing the number of students, but I can't increase my revenues, what happens to my per student cost? It goes down. And I'm probably being compared to a bunch of schools in the same boat. So my per student cost is doing this, and another one down here who has the authority to spend and has the property tax, their per student cost is going here. And so when I look at that state average, it's going like this, And for about the top 10 to 25 districts in the state, it's going like this. So the gap from 5, 10 years ago was this big, and the gap now is this big. And the averaging adjustment was in place to try to keep that gap, not to close it, just to keep the gap from getting wide. And that's the purpose of the averaging adjustment. Yes?
Now, on that cost per student, is that the state's cost per student or your real cost per student?
Which one? The one that they're using?
Yeah.
That's, the cost per student is like school districts.
Well, but I mean, there's resources that are outside of state resources, grants and stuff like that,
Right.
where a district may be spending, right? Is that,
They're all treated equally within how they use each one of those different resources. And there's a formula for that that I'm not getting into. But all the per student costs are calculated the exact same. Thank you very much.